Let's bring in Tom Lee now, co-founder of Fundstrat Global Advisors and a CNBC contributor for more on the markets. Tom, good to have you with us. What did you make of today? I mean, you're a bull. Let's put that out there. Everybody knows that. But the failure to bounce today, did that make you rethink where we are in the markets in terms of market sentiment?
I think the market held up incredibly well today. This Evergrande is the biggest shock to hit financial markets since COVID. And in a way, it's scarier because it involves quite a lot of debt. And, an obscure world, I think, as people look at Evergrande, it involves a lot of leveraged products and off-balance sheet and SPVs. And, so I think the fact that the small caps actually rallied today and the NASDAQ and the S&P managed to hold flat shows that the shock of yesterday was really the big impulse. And today is a little bit of the ripple effect. So I would say I think it's quite constructive, actually.
Okay, so you think it's constructive, but at the same time, for all the reasons that you laid out, why the market action was constructive, because Evergrande is this hairy problem that we have. We don't know how that's going to pan out. Isn't that a reason to be cautious about the markets longer term, since we don't know how this will play out, and we don't necessarily know either the impact on not just the Chinese economy, but even the sentiment of the Chinese consumer. Unlike our markets, the Chinese retail investor plays a big part in the markets over there. A lot of wealth is tied up in the markets from households, and losing a lot of money can really have an impact on the psychology there and then, therefore, the economy.
Yes. In a way, yesterday was a big shock to equity markets. But as you know, if you look at financial conditions, they actually barely budged. Oil barely moved. The 10-year barely budged, and even currencies barely moved. So this was sort of a shock that hit equity markets globally. And as everything you've described, I think, is correct. In Asia, a lot of people have money tied up in property or digital assets now, much more than financial stocks. And if I think about what that kind of means is I think we're just seeing the aftershock of retail investors largely who've been negative. They've been withdrawing money from equities for 6 of the last 7 weeks, and AAII sentiment was the worst reading last week for all of 2020. In fact, the worst since September 2020. So you've got a really sort of cautious, nervous retail market that I think kind of panicked yesterday. Institutions, I think, haven't really dived in because they're expecting aftershocks, and they think if it's like long-term capital or Lehman, that it's going to take some while to repair. So I think, in a way, the markets being flat today is actually a pretty good outcome. So again, I think we're still in a position where I think ultimately stocks are going to rally hard off this. And it's ultimately because unless Evergrande is going to cause a real seismic effect on the U.S. economy, I think the U.S. fundamentals are in good shape.
Hey, Tom, it's Karen. Thanks for being on. So turning to the U.S. fundamentals, I mean, even though the market's not off that much, we had a lot of sectors, as Dan was saying earlier, that are really, commodities really getting hit, industrials, financials. If you're bullish, where of the sectors, what do you like?
We've been looking at this sector relative strength recently, and we're going to talk about that tonight. And I would say it looks like the market's actually trying to decide what's going to be a battleground, because I think FANG isn't as strong as it looks. And I think cyclicals like industrials and financials and, generally domestically oriented companies are actually holding pretty well. So I think that this is a time where the market is waiting. Investors are waiting for the market to tell them where the strength's going to be. But, our guess is that if the economy's continues to be in good shape, which is our base case, and COVID's retreating, then I think you really want to have a cyclical tilt into your end.
Tom, good to see you. Thank you.
Thanks.
Tom Lee of Fundstrat. Tim, you with Tom on the cyclical tilt?
I am. Well, if nothing else, just because of the underperformance. And I realize we may be looking at Q4 GDP that is not what we were expecting, maybe down by a couple hundred percentage points. But we've priced in, maybe this is the fourth wave. And if you're looking at Tom charts, they do a nice job in analyzing COVID and heat map, et cetera. I mean, there's no question we had the second highest crescendo in terms of in terms of infections about 6 weeks ago. And a lot of this led even into September. Cyclicals priced this in, I think, aggressively as we got into the second half of July. And I think a lot of that pain is something that's still going to have to be assessed. But ultimately, and we'll talk about FedEx in a second, but if you look at transports and if you look at industrials, the fact that the earnings power of a lot of these companies has never been better, that's the one place where I don't think we priced in normalized earnings and some actual upgrades we'll see to EPS.